Good morning, everybody, and welcome to the latest webinar from thebusinessdesk.com in partnership with Bevan Brittan. Today's topic or title is Bricking It, the Future of Property Investment in the North. Obviously, we're in unprecedented times at the minute with the changes caused by COVID-19 to the way we live and work, affecting all sectors. But the property industry perhaps might be in the midst of a transformational period. So over the course of today, we'll speak to our panel of experts to discuss what the future holds for property investment across the full Northern Powerhouse and across all sectors. So today, I'm pleased to be joined by Simon Marshall, the Joint Chief Executive of Scarborough Group, James Teagle, a partner from Bevan Brittan, Lyndon Campbell, another partner from Bevan Brittan, Guy Hurwood, the Senior Director of Capital Markets at CBRE, and Jessica Bowles, the Director of Strategy at Bruntwood. So we'll start where probably the most depressing news has come from on retail and particularly on the high street. Has COVID-19 meant the end of the high street and the death of bricks and a move towards clicks? Can I maybe point that towards Guy first?
Good morning, everybody. Look, I think you're absolutely right. The retail market, as it stands today, is in a severely challenged situation. I suppose what I would look at with COVID-19 overall is looking at what has fundamentally changed as a result of COVID-19 and what has been a fundamental underlying issue and trend that we've been seeing for a longer period of time. So retail has been challenged for some considerable time. And the market there that we have seen come through has been highlighted by what's going on at the moment. I think those trends are accelerating. We're looking at the growth of online retail. We are seeing real struggles for the high street and retail generally. I think really what that means and where you look at it in the medium term is how do we look at adjusting what retail offers and how it responds to it. I think those retailers with a good online presence will continue to prosper, and those without need to adapt their business models very quickly. I think what's really important for retail as a whole is thinking about the experiential element of it, the leisure side of it. How do you draw people towards high streets or towards out of town retail parks to get the customers to come to those? And I think we're seeing quite a good shift around that. You're looking at the placemaking, looking at the way that those high streets adjust. Government's been quite important in that, looking at the high street fund that they're currently working on at the moment. That again predates COVID-19 as to how to bring people in. So I think whilst it's extremely challenging in the short term and we are seeing a large number of failures on the high street, I think it's about how it adapts in the medium term to kind of prove its resilience and continue to offer customers and consumers what they're looking for.
So I guess the flip side to the death of the high street is the success of online offerings and therefore perhaps the importance of commercial and logistics sheds. So do we think that is going to be a switch perhaps where the investment might go? Obviously retail's always been quite a strong backbone for many property investors. Does anyone want to take it?
I think, so morning, Lyndon here. I think in terms of sort of warehousing space, we were already a short to some extent anyway. We already were seeing instructions from clients where they were struggling to find sufficient warehousing space. And I suspect that going forward, that's probably going to be already companies that are expanding their operations where they're delivering from online sales and possibly where existing businesses might have actually started doing online sales or more online sales as a result of what's been going on for the last 2-3 months. And actually that they can improve their business model by doing online sales. So we'll need more out of town warehousing space to service that demand. So I would, in my view, I think the sort of need for commercial warehousing space may only sort of increase from what it was.
Jessica, did you?
Yeah, I just wondered if I could take us back slightly, because I think the warehousing and the shift to online, and I can see all of that playing out. But I also think the other trend that we'll see accelerating is the role of independence and independence on the high street that make places much more interesting and attractive to come to. And we've seen quite interesting shifts in business models where companies, independent retailers and F&B offers are coming together to offer something to the public and to their customers. And I can see that continuing post-COVID. And we've had quite a lot of, we've done a lot of work, as you'd imagine, with our retail customers, and particularly those who are a bit more entrepreneurial and independent and are innovating and have been able to do that quickly. I think they've got, you know, a real opportunity for a future. And I think that the way that people are interacting with brands and with the products that they're buying right now, they've sort of had time to think about it a bit. So yeah, of course we want our supermarket deliveries, but actually I'm seeing a lot more interest in people finding smaller producers or people who can deliver to their door from retail units and from and shops that they used to go to. So I think there's an interesting shift, and I'm hoping that there'll be a diversification of the offer as we move through and beyond this. I never quite believe the high street is dead, because I quite like the experience of going somewhere and seeing things, and it may not be where you buy everything, but I think that role of centres where people come together, and it's hard to imagine in a COVID world anyone will want to come together again, but centres where people come together, see things, hang out, have an experience, I don't think that's going away anytime. Well, it's gone away right now, but I don't think it's going away for the mid and long term.
So I guess one of the challenges with the retail space will be, well, if stores do go away and there is empty premises, what can they be used for? But also, what sort of issues are landlords and tenants facing at the minute? So should we start first with the landlord and tenant issues, and James?
I can probably speak to that. So the difficulty that people are struggling with at the moment is obviously cash flow, and there have been problems, and there are still problems, but at least there's a willingness from the government to try and shore up businesses in difficulties. And we've seen that the problems with the CBILS, the Coronavirus Business Interruption Loan Scheme, have been very slow coming to market. We seem to be getting there now. Some businesses have also got grants as well. Quite a few have been missed out from those original grants, particularly those who have shared office space, because they're not registered for business rates, but yet they've got high property costs. So there's been another tranche of money that's going out, but not quite enough for them. The problem is, in the meantime, that landlords, of course, are reliant on collecting in the rent. And whilst they can still pursue tenants for the rent, there are actually shackles on how far they can go, and most of their usual tools at their disposal have been stripped from them until at least the end of June. As you'll know, rent is often payable quarterly, and the next quarter's day rent will be due at the end of June. Now, most businesses that were encountering difficulties didn't pay the March date, even though they'd already traded in the 3 months prior. I think that they're going to find the June quarter date even more difficult to meet. And as a consequence of that, I think the moratorium on the actions that the landlord can take is almost inevitably going to be extended beyond the end of June. If that's not the case, then there's got to be some further assistance, particularly for sectors and industries such as hospitality, leisure and retail, which are going to be particularly impacted by coronavirus. So in the short term, it's a cash flow issue for landlords, and the business reality is that they hold all of the cards under the terms of the lease. The tenants know that they can't be kicked out short term, but the commercial reality is that most of them are trying to strike a deal which involves a form of compromise to see them through over the next, say, 12 to 18 months, by which point hopefully the markets will be substantially more predictable.
I think we as a firm just seen more discussions with landlords and tenants, haven't we, where we've been asked to assist in negotiations between them in terms of, you know, either rent reductions if that can be agreed, or revising terms of existing leases to try and make it work for both parties going forward.
I think that's a really interesting thing, isn't it? You know, how is this going to affect lease terms? moving forward, but also, what what length of terms both landlords are going to look to put in place, but tenants are going to look at. Have you seen any changes within that at the minute, James?
Well, of people who have break options available, they're looking much more closely at those, and I suspect what's happening, whether in discussions with landlords, because I've had a few on behalf of my clients, they're looking at, when they come to renew, having a greater degree of flexibility. It might be a shorter term lease, or at least a rolling break, or more options to break, because the next 12 months are going to be difficult for some businesses to predict. 5 and 10 years even more so. So flexibility is key.
So taking that, does that flexibility roll across all forms of leases, do you think, or is that just looking at it within the retail space? Perhaps Simon, I interrupted you, sorry.
No, it's fine. Sorry, morning everyone. I'll just caveat sort of my contributions this morning, as I'm departing the Scarborough Group in the summer. So if you take these views as my personal views and no more house than that. I think it's fascinating what's happening. I kind of view the current dynamic as something of an acceleration of what was happening already. So particularly we've talked about retail a little here. We've obviously seen some pain in the retail sector. We've seen landlords, including ourselves, start to think more creatively about how we can attract tenants to those locations. So a move more towards turnover leases, shorter term leases, greater risk sharing, which if you're in a position where you're not overly concerned about attracting footfall, which can either be a function of location, or it can be a function of the active asset management, where you're creating additional elements of interest to draw people there, then actually the risk sharing really isn't a problem. We see that it's quite a mature subsector in places like the States, where retail leases are shorter. So I think we'll see an acceleration of that kind of move. As to whether that can translate into other sectors, I'm not sure. I mean, we have seen office leases come in. It's now, you're doing pretty well if you're getting a 10-year lease, and usually they've got pretty generous breaks at 5 years in those. So we've probably seen a gradual shift anyway, and I think that this dynamic will probably just accelerate some of those. I do think that, and not to sort of preempt moving on to other elements, but there's a lot of people sort of wanting to call it the death knell of the office sector, and I think we've probably just got to, a word of caution at the moment. I would liken this current situation to, we've demonstrated resilience. It's almost like a global disaster recovery test. But is it a permanent solution? Are we all going to suddenly start working from home? Does everybody have a suitable quiet space to work from home? Whether it's does every family house have a quiet study? Do the three professional sharers, is it a race for the kitchen table? We've got to think about all of those things. Plus the social element of being together in a workspace, and all of the stuff that we've seen in co-working and breakout areas prior to this. I don't think that all falls off a cliff, but perhaps we'll just start to think a little bit smarter about the places that we take spaces, what we do with those spaces, how we plan those spaces, and a bit more thought up front as to how we as businesses are going to use the spaces we occupy.
That brings us, we'll use that as the perfect segue to go on to that. You've hinted at it, that remote working has been adopted. We're in the midst of the biggest remote working experiment ever. We're all logged in from all over the country now for this debate. How do you see that office evolving post-COVID? Perhaps Jessica?
Yeah, I think we've managed to do in a week or two, as the lockdown started, what would have taken years and years and years to do in fact, you probably could never have done it in a normal time, in that sort of mass work from home place. And I think there was a sort of a euphoria almost when it worked, when you found that you could do this. I came home 10 weeks ago and took up my seat at the kitchen table, and I've been here ever since, and it can work. I think over the long term you start seeing the fragility of that, and not that you can't do this day to day, but actually you lose quite a lot. And it was to Simon's points about the social aspects of being in an office, the ability to collaborate, but also really deeply, what's the culture of the business you're in? How do you create a business culture when you're all sat in your own homes? How do you have those kind of, how do you test the temperature of an organisation when you're all sat totally separately? You know, it's very hard to get a feel for how well or otherwise you're doing as a business, and you certainly lose out on that sort of innovation and collaboration that comes. So I think I'm very unconvinced at the death of the office, and you might expect me to say that as an office space provider, but we have them for a reason, and they have been evolving over the last, you know, anyone who's worked for 20 years knows how far they've evolved over that period of time and will continue to. So I think even more interesting than the question of, is this the death of the office? The question of what's an office for is really interesting, and what are we going to go in to use these spaces for? And I don't think it's necessarily just having a desk that's 2 meters apart from your next desk and not being able to use meeting rooms. I think it's actually the opposite. And I think over time we'll come back to using those spaces for collaboration, creativity, interaction, and that will be there'll be even more of a shift towards that kind of space. And I was never a great home worker, but I do know really that I can work more on quiet things that require my concentration much better from a place that's not full of other people. So I think there will be, I think we'll think differently about our spaces. And I think we might also think about where we work differently. So, you know, I think that the model of a hub or an enterprise centre or somewhere where you can go that's a professional environment that you can work and do this kind of activity in, but that's not in your normal headquarters building, might be the sorts of things that we see happening over time.
So, Jessica, can I just ask you, do you think there might be more of a push to sort of out of town office space? You know, given sort of you look at the sort of transport issues at the moment, that people are going back to work and less people want to use it. Need for maybe more.
It's
office space.
It's a really good question. I think that there will be some out of town locations that do become more attractive. I do think that's a real challenge for transport, because as we move back into a more permanent world, you know, driving to an out of town location feels a very old fashioned thing to do, and is going to be very challenging in terms of some of the other objectives that we've got and problems we've got coming, for instance, around climate change. But I can, and I do think those out of town places could work as long as they still kind of create community. So I think that sort of sterile office blocks out of town, business parks where there's not interaction, where there's nothing to do, where you just go there and work for 7 hours and come away from it, and the sort of place I worked in when I was 20. You know, those I don't think will work, but communities, places that have good amenities, good facilities are set in nice locations, and where there's interaction between the businesses that are there, I can see being something that is more attractive than it felt 6 months ago.
Yeah, and in truth, that was, you know, demand was making that happen anyway. But, you know, occupiers didn't want to go to a sterile business park where there's no amenity, because how do you attract talent? How do you retain talent? It's not just a question of how easy is it for people to get to and from. It's the quality of the talent that you can recruit and retain. You know, if you look at somewhere like a Thorpe Park, there's a huge amount of that kind of thinking gone into there, and you have to keep refreshing and revitalizing. So, you know, I think one of the features of where we are at the minute is it feels like this has been going on for an eternity, but in the wider scheme of things, it's actually a very short period. And all the things that you know, some of the things that Jessica touched on there about the green push and the move away from the car and public transport, I don't think all of that goes out of the window, because we've had a horrible 6, 8, 10, 12 months, however long it is.
You're absolutely right, Simon. And I think one of the things that we've been looking at in terms of what the changes will be and how long the impact will be, and I think there seems to be a consensus among us that the is this the death of the office question is probably a bit of a knee-jerk overreaction at the moment. But I think, as if you look at short-term shocks to systems, people move very fast, people recover quite quickly, and memories are quite short. So I suppose we are early on in this stage. If we continue to have enforced social distancing and lockdowns for a much longer period of time, then I think these trends and changes will become sort of more ingrained in all of us. I suppose the only other thing I thought was quite interesting around the office market as we see it at the moment is two things. One is the requirements that were out and the new occupiers looking for space. They haven't gone away overnight. There's still a good degree of requirements out there. They are still progressing, particularly large ones. Smaller requirements, as you expect, are pausing at the moment, but very much the feedback we're getting is they're paused rather than cancelled. And I suppose the only other thing which is interesting, and Jessica, I don't know if you've sort of seen this at all from your side, but as we look in the shorter term around social distancing within workplaces, clearly we're talking about fewer people being in offices, but the amount of space that's required is naturally larger per person. And so actually, even requirements that are out there, we're not seeing those dramatically shrink because people are suddenly thinking we don't need as much space. They need as much space for fewer people to use in as you were saying, Jessica, I think a more productive, collaborative way, and really thinking about how do you generate value from that space for your business, knowing that maybe in the medium term there'll be fewer people in there on a day-to-day basis.
Yeah, I completely recognise that, Guy. It's and I think we will see. I think it's really wise to start to talk about this as actually something that it feels like a long time and it could shift things for good, but actually it's a pretty short term, really in the whole scheme of things, this is relatively short term. It's going to have some long term consequences around the economy in particular. But I think we'll move into a new phase where people are trying to live with this for a little bit until we find our way of, the way of dealing with treatment and vaccines and the like, and then we'll move back into a different phase. And I think we see the need for reusing the space that people have got in ways that accommodate that interim period as really important.
So I'm going to quickly interrupt there because we just had a question come in. So again, if anyone watching wants to submit questions, just do it through the Q&A button at the bottom of the screen. Do the panel think that investment may be given to multiple office space used by many, so service offices, concepts and things like that, so it's easily accessible so people can flexibly work from home more and meet whatever is needed at short notice, rather than perhaps maybe investing in the big businesses? And also, does this then provide an opportunity to fill those spaces that now might be coming defunct on high streets?
I suppose that there are opposing tensions there, aren't there? On the one hand, yes, what we're talking about here is a theme of flexibility, and clearly those sorts of multi-occupier serviced office type locations, which have moved on, dramatically. So now we've got places like here East, and in Paris we've got Station F, which are great examples of what can be created. Also, you've got the additional consideration of multiple occupiers and multiple people coming from multiple different locations. So therefore, if we're in the tail of this virus pandemic, and how long does that last for? ? No one knows. But sort of working within the bounds of what you can do when you've got such a variety of community arriving into one place is much more difficult to control than if it was one business occupying the whole space. So there's going to be some careful thought. I mean, if you think about the way that a lot of people have rationalised office space in recent times, it's been through adopting hot desking. Well, for the time being, hot desking, you would have to think, is just off limits, because you're going to have to fix people to a particular workstation. So I think they can operate. If you look at some of those locations that have opened up, they've got very sensible measures in place. So if it's a 6-person meeting room, only 3 people can occupy. Face masks have to be worn, or you have to leave the premises. So there are ways of doing it. I think it's a balance. I think the theme really is flexibility. If you can bring flexibility into more traditional commercial space, then I think its future is pretty secure.
Jessica?
Yeah, I think I'd like to come back to the hot desk point in a moment, but I heard a really interesting example during the week where one of the major high street banks was looking to use their high street branches as space for people who traditionally had worked in their office buildings, so that they were using those spaces on the high street as workspace rather than, you know, where they'd close them as banks. I think that's kind of an interesting model, and we might see more flexibility around that. I think the hot desking question is really interesting, because I originally thought, well, just you'll never do hot desking. But there will be ways, and we're quite ingenious, and there's quite a lot of innovation that happens around these areas when you're forced to. Because I think, you know, within a certain day, you're not going to drop down at someone else's desk and start using their stuff and worry about what's on the, you know, what you might pick up from the surfaces. But actually, depending on your cleaning regimes and your booking systems and the way that you manage those spaces and the trust that you can engender between the owner of the space and the people who are using it, be that employer, employee, or co-working owner and co-worker. I think there will be models where that can work. I suspect there'll be I suspect we're going to sort of inch our way back to this, and there'll be some reluctance about being in spaces with people you don't know, being in spaces that are feel a bit less controlled. But I think this will take us, you know, some steps, but we will get more comfortable week by week or month by month, I think, in some of these environments. And we will be, you know, there will be innovation all the way through it, you know, from the placemats on your desks that get rolled up and thrown in the bin, to antimicrobial cloths and all sorts of stuff that we can be using, some of which are pretty simple things to keep spaces safe.
Jessica, do you think that will have a sort of short-term impact on shared office space with, you know, people who might not be keen on the idea of working in a shared office environment, where with shared facilities, or do you think that will just be? Do you think people will just get on with it?
Do you know, I think a lot of this is going to depend on the individual, isn't it? So, you know, we talk obviously to our customers, but also the people in the business, and there are a range of views and feelings about this, and some of that's about, you know, who you've got at home, who you're trying to look after, how vulnerable you feel yourself to the risks associated with COVID-19. You know, I also thought there could be a fall off a cliff with shared space, particularly as that typically gets paid monthly rather than quarterly, and people would just, you know, sort of exercise their brakes and you know, kind of just get out of those spaces. And that's not what we're seeing. That's not the picture we're seeing, which I think is quite interesting. I mean, we've got a long way to go yet, but I don't get a sense that there's a mass move away.
James?
So a number of the smaller businesses that I've spoken to have found, you know, the last few weeks especially difficult. And whereas they've had leases which are, you know, not far off expiring, what they're looking to do, or at least are contemplating doing, is moving down from having their own office space to a shared workspace. Clearly, there's a balancing act, as we've identified, and they're going to have to work out where that balance lies. Having said that, a few others that are in the shared workspace have realised that they're not eligible for some of the grants because they're not necessarily paying business rates. So I suspect what's going to happen there is you're going to see a divergence of people who've hitherto had shared working space. Some will move entirely back to working from home where their business supports that, but others won't be able to do that. And I suspect that what you'll see is a movement in traffic the other way, where they're looking to take small premises off their own. So from the small numbers that I've spoken to that represent, you know, my part of the market, I anticipate we'll still see shared working space being popular. There will be a period of bedding in with that post-COVID-19. And I suspect that the difficulties will be at the lower end of the commercial sector.
I guess tying into sort of the investment angle, do you see that actually there's going to be a difficulty with funding moving forward for developers to build offices, or particularly if there's going to be if we might see a lower demand and therefore the price per square foot might go down or fluctuate, do you think there's going to be any challenges with seeking funding?
Well, valuation's such a big point here, and and maybe Guy might be able to comment from the CBRE perspective. But if you think about why so much activity is suspended now, a lot of it hangs off valuation uncertainty. Some of the things that we've touched upon earlier, particularly in retail and the move to turnover on rents, they've been difficult to absorb into valuation world. So there are some challenges, and some of the things that we've touched on now in terms of commercial office space. If the footprint is the same but the number of people occupying it might be fewer, is the tenant therefore prepared to pay the same amount of rent? And therefore we've got to figure out the metrics. But I think funding as a whole is a really tricky area at the minute. I mean, the piece in the jigsaw missing for me with non-payment of rents is there isn't an equal and opposite forgiveness on the banking side, and so that's where the landlords are in a really tricky spot. I don't see the funding market easing up particularly quickly, certainly not from traditional high street sources. So I think increasingly developers will have to look more towards non-bank providers of finance. Overseas providers of finance, will still be a good place to look, albeit they're more difficult to track down. But yeah, I mean, the answer, if I had the answer to the funding question now, I think I'll be holding my own webinars. But that is going to be a really tricky area.
Yeah, I think Simon, I completely agree with what you said. And I think you did just touch on something which I do think is really interesting, that a lot of business support and grants and funding has been made available to occupiers. I think landlords have felt very much missed out of that part of the equation in terms of how they've been positioned. And you're quite right; they have been rather caught between the two parties, where they're not getting forgiveness on their obligations, and yet the rents that are due in are being forgiven or not enforceable at the moment. I suppose in terms of the valuation piece generally, and where we're seeing kind of that investment market. Obviously prices or transactions full stop have dropped dramatically. We're the lowest number of transactions in the last month for almost a decade by volume. What we have seen, I suppose, across the north of England, we've seen transactions that were close to being concluded, that were in final advanced stages, have continued to drop through. The majority of those have still come through. Deals have been slowed down. What we are sort of struggling to see at the moment, particularly with the enforced lockdown, when you can't do inspections, etc., is actually new properties come to the market and then go through the process. There are a few exceptions to that, but generally that's where we're seeing. So in terms of capital values, we've seen them decrease. I think our research at CBRE suggests they decreased about 2% last month. We're seeing that trend sort of continuing. If you look at other agencies are reporting similar trends, where yields are at the highest level they've been for, again, since sort of the early 2010s. I suppose the key issue going forward and where it's challenging is we've all talked about flexibility and how that's going to now flow into arrangements and contractual arrangements between landlords and tenants going forward. What we've seen in operational businesses is the link to EBITDA, the turnover and revenue generation by an occupier with the rent that they pay. Simon's talked about turnover leases in retail that we've seen more of. And operational real estate, generally looking at hotels, caravan parks, pubs, there's an easy link there between turnover and rents. That has been challenging for valuers who, rolling back 20 years, would say, oh great, we've got a 20-year lease to this tenant, and therefore we'll put a cap rate on that rent and off we go. That's your value. So adjusting to that has been challenging for the sector, for valuers, for market participants and investors. If you look going forward, I think that trend is only going to increase, and I think more and more real estate becomes operational. And Jessica, I'd look at your business model with lots of the co-working space. You've got lots of small number of occupiers. The value that you would generate for an investor on that building is from a lot of small numbers of occupiers, and therefore you're really looking at the turnover of that. There's an inherent void within that, and you then apply a cap rate or a multiple to that revenue that you're generating. So as that shift continues to go forward, I think there will be bumps along the road, and I think there will be challenges. Frankly, where will valuations go in the next 3-6 months? Similar to Simon's point before, if I knew that, then I'd be very happy. I think we're at the start of that process to see how it settles through. And just to sort of conclude on that, I suppose again, I see that as a long-term trend that has been in place for some time. This shift to looking at underlying revenue generation per square foot is really what we have seen and will continue to see. And has the current situation accelerated? It probably has, but it's certainly not solely due to COVID that's taking place.
So, taking that view of income streams, and as discussing, as you just said there, Guy, with the sort of co-working space model. Obviously, if we look at the residential market, it feels like build to rent it seems to be still moving forward quite successfully. We've seen deals being done. Do we think the residential sectors, or how's the residential sector going to change as a result of this moving forward?
Well, there has been, as in a few different sectors, there's been some pretty good innovation even through this period. So we've seen virtual viewings of houses and apartments being used in a quite widespread way. So if I think about our project in Manchester at Middlewood Locks, we've kept taking reservations even through this period, which is a way of just keeping the wheels turning. So it's, the residential market hasn't ground to a halt. And I think, as with a lot of these subject points, you sort of come back to the long-term trend. We're still not delivering enough housing in the UK to meet demand. We're still way behind in terms of that. So, I'm reasonably upbeat about the future of the residential market. I think there will need to be some thinking around what does this apartment block look like in another pandemic situation? How are we? There's going to be a lot more future proofing, I think, in terms of how we design space. If anything, you touched on the build to rent market. That plays to the theme of flexibility. If we're looking for flexibility in our workspace, in our retail space, in our leisure space, the read across into residential is the PRS market, which has very much put control into the tenant's hands. So 3-year leases with 6-month break at the tenant's call, no fees on extensions. So it's become very tenant friendly, and we've got a sort of a generation of consumers who don't necessarily believe in owning everything in the way that perhaps slightly older generations have. You rent your car, you rent your mobile phone, you rent your apartment. You might be working in Manchester this year, you might be working in Leeds or Birmingham next year. So I think the more that we can lift ourselves back up to the 10,000 feet view and look at what's been happening over a prolonged period, you start to look at this as a very painful interruption, but an interruption nonetheless.
Yeah,
I think one of the short-term difficulties that the developers and the agents are finding, from what we're being told, is that getting the sort of property market back up and running with, getting people to do viewings and getting people to move house. Because whilst there have been restrictions lifted on those to some extent, you still may have a property that, somebody can't allow people to view or can't allow people to move into because they may be shielded or, self-isolating, and that can cause problems when you switch the chain. So, if you've got a developer who's selling new build-up properties and there's a chain behind it, that can slow down the whole thing. So that's, in the short term, that's one of the things that I think a lot of the agents and the developers we're talking to are sort of struggling to work out how that's going to work at the moment.
I was speaking to a developer yesterday, and they're selling an increasing number of their properties off plan. They've managed to get reservations down on 75% of their development, which in the present market I thought was particularly impressive. But I read an FT article earlier this week, and it said that near as makes no difference. 500,000 transactions in the housing market have been put on hold during the lockdown. But I suspect now that we're seeing physical valuations restarting and a number of the lenders bringing out the higher LTV products to market, we'll probably see the market open up again. Having said that, there's going to be a backlog while the valuations work their way through the system. And I think that as we saw, the last downturn, I think we're going to see a number of down valuations, which are particularly going to affect the lower end of the market. So whilst the demand for new housing is likely to remain, I think the longer term outlook is less clear, and would be buyers or sellers are probably assessing the impact of the virus on their employment and their earnings and confidence. But there's probably going to be a possible rebalancing where I think buy-to-let investment is going to plug the gap now, where people have got the money and they're not reliant on high LTV mortgages.
I think it's really interesting, James, isn't it? I think from the kind of the private for sale market, you've got these competing challenges of the economic uncertainty a lot of people are in, but equally for the large number of people who have been confined to their home for a significant period of time, and if they were already thinking it wasn't suitable for them for whatever reason, their desire to move, you can only imagine, has gone significantly higher than it was at the beginning of being enforced to stay in that house for the last 10 weeks or so. So I do think there's probably some pent-up demand from there. I suppose just touching on the PRS sector again, I think that's the one sector, and interestingly, I was in dialogue with some of our colleagues in the Far East last week, talking about what they have seen, and obviously they're further through this pandemic than we are. And the one sector that they specifically outlined that where values have remained high, or have remained consistent, and demand from investors has remained, is in the PRS sector. And I think that looks back to the underlying cash flows behind that. People fundamentally, whatever else is happening, people still need somewhere to live, and therefore, how confident are you of that cash flow? You're more confident of that, and as an investor, it therefore looks like a very sensible investment. And equally, one of the sectors that we've seen in the local market, we've been marketing a PRS block, and we have offers were called for that during the lockdown, and the numbers that have come in on that have been encouraging. So I think we're seeing a similar trend, and we're certainly seeing investors are more bullish in that sector than many others at the moment, regardless of the pandemic. So it's positive signs for that sector.
Okay, so we'll start to bring it towards a close, but one final question from the audience. It's a tricky one. If you had £10 million burning a hole in your pocket, which property sector would you be investing in today? Now, I am going to put a caveat on this. Please, no one, take this as gospel. But I don't want any letters to me. But it feels like an interesting one to end on after this debate, where we've covered the fact that the high street's probably not dying. PRS seems to be doing well. Office space is going to continue to evolve as it's done over the generations to meet the new requirements of future tenants. So we'll start with Jessica, and then we'll do a round robin.
I really hope my finance director isn't listening to this, because I probably would get sacked at this point for spending any of his cash. I would go for some well located near transport hub buildings that had taken a bit of a cut through this valuation, because these are moments where you can get good deals, and so I don't think this is all going to stop for the next year or two. So that's where for office and for shared office space.
Perfect. Simon, same question.
I think fringe city centre for last mile logistics could be a really interesting place.
Okay, so that ties in the future of the commercial and the opportunities that's bringing in. James?
I would invest it in residential. I think people put a greater importance now on the quality of their home life, and increasingly now that it's difficult to separate home life and work life. So I reckon mid-level properties for people wanting to trade up.
Perfect. Guy?
Yeah, it's interesting. I think similar to the themes here, I think beds and sheds, it's been a trend for a long period of time, but I think both of those sectors are continuing to look positive, so that's where I'd be focused. But fundamentally looking at absolutely granular details of each opportunity and based on the fundamentals within the sectors.
And then finally, Lyndon.
I think linking back what to Simon said was sort of last mile delivery, what I said at the start of the webinar about warehousing. You know, I think there is a need to plug that gap for that sort of last mile local delivery service. So I think sort of a similar sort of thing, the last mile delivery.
Perfect. So thank you everyone for joining us today. There will be a write-up following this webinar and videos made available on thebusinessdesk.com. Thank you to all our panelists for sharing their insight. And I hope to see you all in the future events. Thank you very much.